Hi everyone, I'm Ricardo Gonçalves. Welcome to SBS On The Money for this Thursday, the 17th of September 2020. It's your daily 10-minute business and finance news wrap. We are going to start with that unemployment rate. Unemployment falling to 6.8%. It hit 7.5%. That's a 22-year high back in July. But then the unemployment rate fell to 6.8% in a move that surprised many economists. 111,000 jobs were created, most of them, though, part-time. So, does this headline number truly reflect the state of the economy? For that and more, I spoke earlier with Diana Messina, the senior economist at AMP Capital. Diana, how do you explain the fall in the unemployment rate from 7.5% to 6.8%, and what were the highlights in the report?
I mean, it was a blockbuster report all ways that you could look at it. The reason that the unemployment rate fell so much was because jobs growth was extremely strong at over 100,000 in the month, and that led to that big fall in the unemployment rate. The highlight for me was really to see that even though Victoria had job losses of around 42,000 in the month, I was expecting it to be higher. And it really highlights that the rest of the states are completely offsetting the weakness that we have going on in Victoria at the moment.
So overall, right, does it really reflect the true nature of the jobs market? And what's the effective unemployment rate given the current stimulus?
Well, the only other employment-related data that we have to go off is the weekly payrolls report. But from history, we know that the payrolls aren't necessarily a good guide to employment. They tend to be more pessimistic than what the employment data comes out at, but maybe because they end up getting revised. So I think that it is an accurate reflection of the current state of things in Australia, but it's really around the outlook now and where the risks are. And I think that even though the Victorian job losses haven't been that high yet, we did see a huge fall in hours worked in Victoria over 1 month. Hours worked fell by 4.8% in 1 month in Victoria. To compare that, in the rest of Australia, hours worked are down by about 5.1% over the year. So it's a huge fall in hours worked. And what I'm concerned about is that a lot of those people in Victoria might still have remained on the payroll in August, therefore not technically being out of the labour market or unemployed. But the longer that the lockdown continues in Victoria, you may see that those people end up losing their job if they have no industry or no work to go back to. The effective unemployment rate is a better guide to what's going on in the labour market. It includes people who have left the labour force, includes people who are on 0 hours. We saw the number of people on 0 hours increase in August because of the Victorian lockdowns. And that effective unemployment rate on our estimates is at about 9.6%. That is lower than last month. It was at about 10%, but it's still much higher than the actual headline unemployment rate.
All right, so what does it mean about the peak in unemployment? Does it mean it's pushed lower, or have we now seen it?
Well, before we were expecting that the unemployment peak would be at about 10% at the end of this year, and Treasury and the RBA were looking for something similar. With today's numbers and the more encouraging improvement in the labour market, we think that the peak is still to come, but it will be lower at about 9% at the end of the year. The reason for why we still think the unemployment rate is going to rise is because more people are going to go back to work, which will increase the labour force participation rate. When the labour force participation rate increases, you need to see jobs growth remaining quite strong to keep your unemployment rate unchanged. And I think that given that we've already seen a pretty robust increase in jobs since their weak point in April, I think it's difficult to see very strong momentum in jobs growth. Jobs growth will still be positive, but it's hard to see very large increases. And for that reason, I think the unemployment rate is still due to increase.
What does it say, though, also about the economic recovery?
I think Australia has done well on the economic recovery so far. Our GDP data for the June quarter was better than what a lot of other global counterparts experienced. Our labour market recovery has been pretty good as well. I think it's pretty comparable to other countries like the US. On my estimates, about 52% of jobs that have been lost due to COVID have now been regained. About 72% of people who left the labour market have now gone back into the labour market. So I do think that this recovery that we've had over the past few months has been quite good, but you need to see the momentum ongoing in the recovery. And that's what worries me about the outlook, that while we may have had this, V-shaped Nike swoosh, whatever you want to call it, recovery so far, you need to see more policy stimulus coming through to really accentuate the recovery from here.
Diana Messina there, the senior economist at AMP Capital. Now, the jobs data didn't actually have much of an impact on the Australian share market today. The S&P ASX 200 down 1.2% to 5,883. Iron ore miners led the losses. CSL down almost 2%. The banks rose with the exception of the Commonwealth Bank, but the focus was actually on the US Federal Reserve. Overnight, Chair Jerome Powell said that interest rates there are likely to stay near 0% for possibly 3 years. So for more on that and what it means for the markets, I spoke earlier with Angus Geddes, the CEO
the market's under
of
pressure
Fat
today.
Profits.
Why?
A lot of selling today, particularly in the mining sector. A lot of profit taking in Fortescue Metals and BHP and Rio, with the iron ore price losing ground last night. We also saw quite a lot of selling today in the technology sector, Afterpay, and some of those buy now, pay later stocks in particular coming in for a lot of selling.
I guess a bit of attention also coming from the US, because the US Federal Reserve Chairman Jerome Powell saying interest rates there will be close to zero for possibly 3 years. Can you tell us about that? And more importantly, what does it mean for investments?
Look, the Federal Chairman is quite concerned about the economic recovery in the United States remaining on course and tracking. And I think a lot of that's due to the fact that we've had all this squabbling in Congress. The Democrats, Republicans can't seem to agree on a second round of fiscal stimulus. And I think the Fed's quite concerned about that. They need that second package passed to keep that economic recovery on track. Well, if interest rates are low, it's really signaling that there's a lot of trouble ahead for the economy. If the Fed really does believe that interest rates are not going to rise, they think that economic conditions are going to be quite difficult and quite protracted for some time.
And did investors care for this large fall in unemployment today?
Look, the unemployment number was a great number. It was well ahead of consensus, but the markets really chose to ignore that today, focusing more on the US futures, which were down quite heavily after that Fed meeting, and also that selling coming through in the mining sector.
Angus Geddes there, the CEO of Fat Profits. Now, before I leave you, an interesting note on housing from Westpac today. Economists there forecasting a 15% increase. That's an increase in house prices over 2 years. Why? Because of record low interest rates and an eventual economic rebound. However, those 2 years are for the years 2022 and 2023. It has today revised its forecast from a 10% fall to 5% fall in house prices from between April to June of next year, although that recovery or falls will be uneven. It expects Melbourne house prices to fall by 12% and Sydney house prices by 5%. So that is On The Money for this Thursday, the 17th of September, 2020. I'm back from holidays. I'm actually away on a shoot for Small Business Secrets tomorrow. So On The Money will return regularly as a webcast and as a podcast from next Monday. I'm Ricardo Gonçalves. You can follow me on Twitter at Business Ricardo. I'll see you soon.